Hey, Randy, I got another home run for us, man. This 2-bit exchange is absolutely amazing.
Hey, Bruce, what's up, man? Yeah, why don't you tell me about that 2-bit exchange?
Yeah, that's right. And we're going to be able to list our coins that we want, that we support, and they're going to be on this amazing derivatives platform. It's absolutely awesome.
Derivatives? I love derivatives. I can't wait to be on the trade copy program.
So what I want you to do is set up an account and then send me your UID, and let's set you up with a trade copy system, and you just let it run. Copy our trades. That's it. Easy peasy.
So you want me to open an account, send you my user ID, and you hook me up with the trade copy system. I can't wait. Sounds spectacular.
Hey, Matt. Hey, listen, I met with the guys at 2-bit exchange while I was in Dubai, and this platform really looks amazing.
Yeah, hi Bruce. Yeah, thank you again for that heads up. I mean, I've looked into this 2-bit platform. It does appear to have everything we're looking for.
Yeah, that's right. 2-bit, Toobit. They have great liquidity. They have futures platform. There's a lot of functionality that I think you're going to like on there. And they really want to work with us. They want to work with the Impact Money Show. And as you and I both know, if they have a good product and they want to work with us, well, hey, that's half the battle.
I mean, basically, I love that copy trade facility. I love the features on the platform. It's basically very simple to use.
Our viewers only need to set it up to copy our trades, and they just do all the trades that we do. Makes it really easy for people to participate. I think they're going to love it. I'm pretty excited about it.
And yeah, it's definitely going to benefit people. I mean, obviously with all the years of experience that we can pack into it, and people can basically benefit from that. Yeah, I definitely think it's a goer.
Hey, David. Yeah, man, I'm excited about it too. I mean, when you think of the ways that we can help our viewers earn money and be able to participate in the monetary revolution, this 2-bit platform just opens up all kinds of doors that they don't have right now.
Hey, Bruce, I'm checking out this platform. It's revolutionary.
That's absolutely correct. And the futures platform is amazing. Great liquidity. And the copy trader program, people are going to be able to make the trades exactly when we make them and make the money that we make. It's a win-win for everybody.
Open for U.S. customers, and you can deposit money with the credit or debit card. Doesn't get better than this.
Beautiful. And what do you think we should use as a referral code?
I think we should use Impact Money. That's the one. Impact Money.
Hello, good morning, everybody. It is always a pleasure to be here. You're watching on the Smart Money Culture TV network on your TVs in Texas and Louisiana. Welcome back to the Impact Money Show, where we dive into the economic abyss. Today, we're talking about runaway inflation, fueled by Washington's insatiable thirst for printing money like drunken sailors. Let's kick off with the CPI data that's coming in hotter than a July afternoon in Arizona. Despite this, the whispers around the banking cartel suggest rate cut in December on the 18th, after which they'll likely slam on the brakes on further cuts. Why? Because inflation is not just high, it's climbing the stratosphere. The Federal Reserve, our very own banking cartel, well, not really our own per se, but the U.S., the ones who have control of the U.S., is printing dollars out of thin air. Meanwhile, Congress, in its infinite wisdom, just announced another $50 billion aid to Ukraine under the Biden administration. But let's ask the real question. Where is this money coming from? It's not from the magic money tree. It's from you and me. The cartel, the Federal Reserve, tells the Treasury to print it, hands it over to Congress, and with about a 3% interest fee, diluting our money supply and making every dollar in your pocket worth less. And let's not forget, this interest fee adds up. We're now looking at a national debt of over $36 trillion with the T dollars. It's a laughably large figure because there's no way out. We're not just in debt, we're owned by the banking cartel. If we were to reclaim our gold stolen back in 1933 with interest for all these decades, we'd have no debt. But here we are, still paying for a promise of a return that never came. In 1933, Eisenhower did an executive order and they confiscated everybody's gold. Nobody ever talks about it. I talk about it. They confiscated all your family's gold and they gave it to the Federal Reserve. And the Federal Reserve was supposed to give it back and they never did. They kept your family's gold. I want it back. We deserve it back. We're going to get it back. Now let's shift gears to crypto. Bitcoin is bouncing back, hovering, actually now passing 98,000 after a dip that sent altcoins tumbling. But caution is key. Days like today when CPI data hits can be wildly volatile. Though the markets are usually wise by the news by now, if you're looking to jump into the fray, don't forget our partnership with 2Bit Exchange, TOOBIT. You saw the ad at the beginning of the show. Use the referral code IMPACTMONEY at 2bit.com to leverage our 60 years of a combined trading experience. We can set you up with a copy trader, making it simple for you to follow our moves. The financial markets are showing mixed signals. Dow futures are slightly down. Gold is up a tick, and silver's on a small decline. The U.S. dollar is gaining strength, likely because of the markets expect a rate cut freeze come in January. And remember, the Federal Reserve has a mandate that includes market making. This is something that people don't talk about. They don't understand it really. So I'm here to tell you all these things that a lot of people don't know. I consider it my job. It's my job to do this. To tell you all the things that they don't want you to know. They've been known, the Federal Reserve, the banking cartel, has been known to crash markets. With the, I had to send that to myself. The Federal Reserve has a mandate that includes the market making. They've been known to crash the markets by selling high and then buying back low, liquidating traders and sucking the value out of your investments. It's a way of controlling the money supply, particularly they like to do it with commodities like Bitcoin, which is what I think they just did, if you ask me. I think that's what they just did. On the geopolitical front, the Middle East is in turmoil, with Israel emerging as the significant beneficiary. Is the U.S., Israel, and Turkey forming a new axis? It's a grim scenario, especially with reports of executions in Syria. The future looks dark there, much like Libya, Iraq, and Iran post-regime change. Perhaps it's time we let countries handle their own affairs. I mean, what a concept, right? What a concept. Let them handle their own affairs. Everybody doesn't have to be like us, right? Everybody doesn't have to have the same type of democracy or whatever that we do. Maybe it doesn't work for them. Maybe they like something different. Finally, speaking of wealth, Elon Musk's net worth has soared to $442 billion. His ventures into AI, robotics, and space exploration are not just profitable, they're shaping our future. AI is transforming industries from healthcare to manufacturing, with companies like xAI pushing the boundaries in understanding the universe. Robotics They're not just for assembly lines anymore. They're becoming an integral part in the daily life, from autonomous vehicles to service robots in homes. And space, Elon Musk's SpaceX isn't just going to Mars. It's about making humanity multiplanetary, which could be the most significant economic frontier in human history. Could Mars be the next Silicon Valley? Only time will tell. But the economic implications are vast, obviously. So strap in, folks. We're in for a wild ride where every dollar counts, every policy matters, and every technological advancement could redefine our economic landscape. Stay tuned, stay informed, and remember, at the Impact Money Show, we're here to guide you through this monetary revolution. The great Matt Dixon, of course, will join us here in a bit. He wanted the link early. I'm always like doing so many things. I'm gonna need to put the banner here at the bottom with all of our coin prices. So I started doing the streaming banner yesterday, and yeah, I'm like, we will soon have more people, more hands on deck to help us out with this stuff. I've been talking about how we are expanding. We're expanding the TV network. So right now, the Smart Money Culture TV network has 5 stations. And we're in the process of buying 88 more stations. We'll be in 31 states. We will be the largest crypto-friendly TV network in the United States. It's big. It's big. And the truth is that people are turning off their cable. There's a big move. People are turning off their cable. Why are you paying for cable TV? You have the internet. You can stream everything you want to do. And then, of course, you turn on your TV. And guess what? There's channels that come in. People like us are broadcasting in there. You can watch your local TV. You can watch your sports. Everything's right there on your TV. Cable TV is actually a bit of a scam. And we have much more freedom as well on the antenna TV. And if something happens as well, you're going to turn on your TV and you're going to want to get from the antenna. That's why George Soros actually tried to buy, he has been trying to buy television. But they won't let him. So he did work out this deal to get, I think, 30% of the radio stations. From what I hear, Trump and his team are already lined up to nix that deal. Should never have been approved anyway. It's crazy that they would let that go through. So that'll probably be stopped. But it's a big move. It's a big move. If you want to be involved in that, reach out to me or reach out to us on smartmoneyculture.tv. Smartmoneyculture.tv is the name of it here. I can put that up there. You can reach out to us there. We don't want your last 100,000. Don't come to us with your last 100,000 or something like that. But if you want to be involved, let us know. And there's a lot of opportunity there. Speaking of opportunity, we're doing a lot with Global Boost. Global Boost is taking a major stake in Smart Money to make this all happen. Global Boost. We have a cryptocurrency, the Global Boost BSTY. It's been around for over a decade. Could be a very good move. The markets have continued to rise as the show has gone on here. Let me just get this banner up here. So I'm going to pull on the great Matt Dixon here. Let's talk about the markets.
Yeah,
Sir,
good
how are you?
morning. I'm fine, thank you. Back in chilly UK, but it's a pleasure to be here.
Welcome home.
Been lots going on. I was looking forward to hearing all your political commentary. There's been a lot going on, hasn't there, with particularly in the Middle East at the moment. Have you mentioned it on the show?
Yeah, there is a lot going on. Gosh, man, just a mess over there, and I think it's going to continue to be a mess. There's, those poor people. They're executing people. It's like, oh my gosh, like, it's rough.
And the markets are just taking it in their stride for the time being.
For the time being, the markets are just taking it in stride. A little bit of a pullback yesterday, but really was eaten up pretty quickly.
And that's the big question right now, isn't it? Is this pullback, is that complete, or have we got more to go? So I'll just share my screen. I won't jump straight. I'm actually going to just touch on dollar index first of all, I think.
Okay.
In fact, what I'll probably do, if you can see my screen, I take it.
Yes.
Yeah. So I've jumped into the total market cap of crypto. A little bit of a small chart, but hopefully you can see it. This is on my X feed. I guess that's why it's small. But longer term, looks like we're basically on the current. Well, you can see where we are at the moment. Total market cap of crypto is over 3 trillion now. So I remember it was a big news when it broke through 1 trillion. Now we're over 3 trillion. From the look of this chart, from an Elliott Wave perspective, it looks as though we're probably due a bit of a pullback and we've already started that. I think we'll see that when we look at the charts in a moment. I think the pullback has started. I don't think it's complete yet, but there are various possibilities. As we know, in trading and in markets, there is never certainty. There are probabilities, and to each of those probabilities, you can assign a degree of certainty. At the moment, it's looking as though we've had, it looks to me like some kind of clear wave 4 down in the market cap of crypto here. Wave 4 is normally choppy, sideways kind of movement, very, very indicative of a wave 4 here. And then you get a wave 5, which is in 5 waves. So this one's choppy, sideways, wave 4. And then we get a 5-wave move up in the 5th wave. So within that, we can probably see we've got some kind of leading diagonal wave 1. Then we've got a wave 2 down, wave 3 up, 4 down, and 5 up. That's within wave 2. So sorry, we've got 1 up in red, 2 down in red. Then we've got 1 up is a leading diagonal here, 2 down, 3 up, 4, 5, making up wave 3. And as we know, wave 3 is nearly always the extended, most powerful wave in not just crypto, but across most assets. Wave 3 is normally the biggest wave. And that's normally where those Fibonacci extensions fit in. The 1.618 that we talked about, sometimes 2.618, sometimes 4.236, and it can go beyond that. And particularly in crypto, which can be highly volatile and aggressive, we can see the more extreme Fibonacci extensions. But very often the market does go to exact Fibonacci extensions. So anyway, we've got the extended wave 3 here in red, then pull back in wave 4. Now, what's interesting here is the projection for wave 4 is projected to pull back to the wave 4 of lesser degrees. So you can see the small wave 4 in black. They're expecting wave 4 in red to pull back to about that level. And that's it's an Elliott Wave guideline, not a rule. So you have rules in Elliott Wave which can't be broken. So for example, wave 4 cannot cross into wave 1. It's not allowed, just not allowed. But you also get guidelines. This is a guideline that normally when you get a wave 4 of larger degree, it normally retraces to about the wave 4 of lesser degree. And that's why it's got it round about there. So it hasn't happened yet. But that gives us possibilities for trading. If it does pull back to there, there's likely to be some support around this level. And that gives you what's called a good risk-reward ratio. So the risk of a breakdown would be smaller, risk of a breakup would be higher. And you can put a stop loss very close below with potential larger gain above. So you get the risk reward in your favor in a number of different ways. And that's really how trading works. Because as we say over and over again, there really is no certainty whatsoever in trading. There are just probabilities. And it's not gambling because there's not entirely gambling. I suppose there is certainly risk involved, but
it's similar. but no, it's totally different, really.
Yeah, I mean, it is different, but even so, there's some elements. Whatever you do, there's risk involved. So in a way, it's akin to gambling a little bit, but you can get those risks very much in your favor. And if you do your risk reward properly, then you're right, it's not gambling, and that's how some people can consistently make money as traders long term. Yes, they'll take occasional losses, and that's the kind of slight gambling element to it. There's no certainty, but you get all of the things in your favor. So as I say, with the Elliott wave, you get certainty, certain rules, fixed rules, and you get guidelines like this. So even with a guideline, it gives you a good area for potential buying into the crypto market again. So as I say, that's on my X feed. I'll just jump over to where we are now. So if I try to think about where we are, this is dollar index. At the moment, it seems that the crypto market seems to be going pretty much in line with the dollar index, which is kind of unusual. We often got it going the opposite way, but we have got instances. I know when I looked at the long term, I compared Bitcoin with DXY. Sometimes you get highs in Bitcoin corresponding with highs in dollar, and sometimes the other way around. But they do tend to correlate, but sometimes it goes into complete reverse correlation or inverse correlation. So you can't tell for certain. But anyway, we appear to have an A wave down. Now the A wave here is made up of 5 waves. We can see from the top, wave 1 down, 2 up, 3 down to here, 4 up and 5 down. That's an A wave. Then we've got an A, B, C, B wave. So I'm expecting probably the dollar to weaken somewhat further to give us an A, a B, and a C down. So just to put that in the same, let's just put a border on that one because it's an A wave down, a B wave up. I'm expecting a C wave down in the dollar. So I'm expecting some dollar weakness before we then move up in the dollar. So at the moment, it seems, as I say, especially since Trump got elected, there seems to be quite a good correlation, a tight correlation between the US dollar and between cryptocurrency and in particular Bitcoin. Whenever the dollar goes up, Bitcoin goes up and vice versa. And as I say, that's a little bit unusual, but it's just the way things have been going recently. And you've got to be a little bit adaptive and watch what's happening in the market and just take it on board and not just think you're right. You got to watch for sometimes there are subtle changes in correlations and so on that you need to be aware of. So I'm thinking we may see a bit of a turn down in dollar reasonably soon, which might correlate with a bit of a downturn in the crypto market. So let's just try and see how that will factor into the crypto market. So I don't think we I'll check. I'll click on pound anyway. I'm not quite sure why the things are just slowed down here. Shouldn't be. I'm in the UK. The internet should be rapidly fast.
Should be perfect. I mean, Dubai is pretty nice too. But yeah.
Dubai can be good. We're on the pound. Hopefully you can see the pound. So again, we can see, I'm expecting probably a bit of a pullback further here in pound against the dollar. That's showing weakness in pound. So the difference here is we're not just talking about the dollar, we're talking about the pound as well. And the pound is particularly weak really at the moment. There's, as I said, there's a lot of uncertainty. A lot of people are very, very disheartened with the Labour government, with the way things are going, more so than ever before. As I said, we've got a petition going round. Not that I'm involved with it, but there's a petition gone around with now, I think it's a few million signatures, people saying they want another election. They don't want Labour anymore. And Labour only just got voted in a few weeks ago. So they haven't really hit the ground running. But let's see. I mean, they had a difficult situation, a bit like Trump in a way, very difficult situation to handle when he came in. And I suppose everywhere the world is facing challenges, so it's not easy. But the one to watch, and as I say, this is the real one to watch, I think, is dollar yen. So when we look at dollar index, we've said this before, that's the dollar against a basket of currencies, and the biggest constituent of that basket is the euro. The euro actually makes up more than half of that basket of currencies against the dollar. So when you're looking at DXY, you're looking almost at dollar against the euro. Yes, there are other currencies, but the euro is the big one. So, and again, the euro is particularly weak. There's political weakness in France, in Germany, economic weakness across the board. So, you know, at the moment, it's a competition between, well, America's certainly in a stronger position, I would say, at the moment than other countries. and particularly Europe. So that sways the dollar index. But the reason I'm really interested, I really keep a close eye on dollar yen, is because, as we said, that is the carry trade. That is basically people borrow money in the yen at very, very low interest rates, almost zero. And that's where they get the money to invest, or a lot of the money anyway, to invest into risk assets like cryptocurrency, Bitcoin, like the SPX, and so on. So it's really important to keep a close eye on this. And again, there's a couple of possibilities here, really, with the dollar yen. Whether we potentially have one more push up. If this is a wave 4, I've got a question mark. If it's a wave 4, we'll push to higher highs above here. That will be positive for the markets. But if we actually have a complete ABC to the upside and we're starting down, and I can actually see 5 waves, to be honest. If you look from the top here, wave 1 down, it's not labeled, but just so you can see where my cursor is, 1 down, then wave 2 up to there, 3 down to there, 4 up to there, 5 down to there. It's actually a nice 5-wave move. 5 waves would be impulsive, so that would mean this ABC is perhaps correct. And we've already started to move down. That would mean that this move up here is corrective. It's against the trend. So the next major move would be down on dollar yen. Now, maybe not just yet. Maybe the correction isn't complete, but I'm just saying before we reach new highs above this level, the dollar yen would turn down. And this actually corresponds very, very well with risk assets like Bitcoin. So when it's going up, Bitcoin's going up, and that's what we're seeing today, really. We're seeing a good, strong day for Bitcoin so far, really, and risk assets in general, a strong day. And we're seeing a strong day for dollar yen. So, but if this turns around, and don't forget, the Japanese are looking to raise rates. If not this time, then, very soon. I think they're meeting, from memory, is the 18th of this month. I think that's right. I'll have to check. I know we've got a dollar rate decision as well. As dollar is getting closer and closer to a 50-50, whether they reduce rates or not. So the opposite of the Japanese. The Japanese are looking to raise rates, and the Americans are looking to reduce rates. So the Japanese are struggling with inflation, and they want to raise rates because they really hate inflation in Japan. That's the big, big thing. We should be hating inflation everywhere because it's a kind of tax on the poor. It's one of the ways that, in a way, wealth is distributed from the poor to the rich. The poor people just paying more and more for their goods. And everything's manipulated with interest rates, with inflation rates. So Japanese have got high inflation. They're looking to raise rates to put a stop to that inflation. The US also have high inflation, but the US, for some reason,
the CPI numbers, I think, come out in a couple hours as well. They're supposed to be hotter than expected, or whatever. Basically, they're going to be high.
Absolutely right, Bruce. And if they're hotter than expected, that should be a dampener on the markets, because this is one of the last, there'll be a latter data points now that come before the rate decision. So if we get hot CPI, you'd wonder, how can the Fed lower rates when they've got hot CPI, when that's then one of the main mandates is to manage inflation. So if you've got inflation well above target and rising, as it has been lately, and unemployment's also rising, actually. So you've got economy slowing, so you want to lower rates for that, but you've got inflation above target and increasing, so you want to raise rates for that. So as we've always said, they've got this walking a tightrope, and you generally can't deal with both situations, and it's a really tough situation when you've got rising unemployment and at the same time rising inflation. And if inflation rises, I think the odds of a rate cut are diminishing. But they have said they're in a rate cutting cycle, and they want to what they call normalized rates, so bring them down to what they call a more normal level, which will be lower than what they are now. So they're in this rate cutting cycle, but if they've got elevated inflation, I don't know how they can cut inflation. So it's a real tough one. But if they do decide not to cut rates, that would be a bit of a shock to the market, I suspect. Markets would not like it, and we get a sell-off. So again, a bit of a tightrope for markets here. There could be a sharp turnaround. And I think a lot of it will actually depend, as Bruce said, on the CPI today. If we get elevated CPI, then there's a less chance they're going to be cutting rates moving forward. So very, very important now to watch this. The big news has come out, the big market moving news, like the Trump election. As I say, people seem to be inured towards the trouble in the Middle East, political troubles there, geopolitical troubles. that could flare up and cause a problem. But for now, the market is inured, kind of used to it, taking it in its stride. But they're watching economic news, and I think that's going to be potentially quite a big driver. So as I say, potentially, if this is actually, I'll just remove that now. I don't like it as a wave 4 anymore. Yeah, just remove that. So potentially this is a 1, 2, 3, 4, 5 down. We get an ABC up, and then we'll get the next move down. If we get another move down in dollar yen, that would correlate with a down move in risk assets. So if the Japanese raise rates, and yeah, let's just see if the Japanese raise rates, then that could set the cat amongst the pigeons, as we say, and send dollar yen down and send Bitcoin and cryptocurrency down with it. And I'm going to jump straight over now to the SPX, because that's been a really nice one for us. When I say a nice one for us, we had long ago, we had this 100% extension up here and said that's going to be a barrier for the market.
Yep.
You know, and I did say there's going to be some resistance around that 6,000, actually 6,1, and I gave it in advance this level because it's a Fibonacci extension. And not only did we have that ceiling there, kind of glass ceiling, as it were, for the SPX, the S&P 500, we also had this regular bearish divergence where you get higher highs in price. And though I've not got it showing here, again, like the other day, the RSI is actually showing lower peaks in the corresponding RSI. So when you got that, you have what's called regular bearish divergence. It tells you that price is about to head down. And bearing in mind, we also had this 100% Fibonacci extension here. It actually turned on the button exactly where we expected. And we can see there's been quite a move down so far. I say quite a move down. I mean, it's no big deal at the moment, but there's potential for that to accelerate further to the downside with those indicators in place. At the moment, from looking at moving averages, things are still looking reasonably healthy. If the price were to move down further, eventually you get a crossover of these moving averages. And on the daily, if you get a crossover, you actually get what's called a death cross. We're nowhere near that as yet, but I'm just talking about the indicators, what they might potentially show us in the future. But for now, you had a very logical potential turn for the market here, and it turned exactly as we expected. So that was very interesting. I'm going to jump to Solana next. We will go back to Bitcoin because obviously that's the one that most people are watching. There's a couple of possibilities here for Solana. I've got it labeled from the top as basically from the very top. We've probably seen the little blue here. I've got wave 1 down, 2 up, 3 down. I'll move that so you can see it a bit better. 3 down there, then 4 up and 5 down. Sorry, that cannot be a W at all. So I've got that in the wrong place. I'm going to remove that. So basically that's 5 waves down, then we've got 3 waves up and 5 waves down. So that would potentially be a W. I'll put the W in place there. And then we've got basically an ABC up for the X wave, and then that's we're labeled correctly now. So basically it's an ABC for a W wave, then we've got an ABC for an X wave, and then basically an A, B, and a C for a Y wave. Now this is what I expect to happen. So I don't think the downside is complete at this time on Solana. I think there's one more push down. So let's see. I think the CPI might be the turner. It might be the one that turns that. But there is a possibility. And as I say, there are various options, various possibilities. And for each you assign a probability. So it is actually possible that we've already got some kind of completed A, B, C move down. So it'd be basically a 5, 3, 5. That would be a zigzag move down. So it could be a completed correction already here, or we could have one more leg down to complete the correction. So there's the uncertainty, and we need to see what the CPI tells us. But there's a real possibility the correction is potentially complete here. So it's not a WXY, it would then be an ABC down. They're both corrective moves, but it's just a matter of which one is correct to show us the actual turning point. If it's correct, we should then push to new all-time highs very quickly on Solana. So, but if we get if we get strong CPI and the markets turn around, we could potentially get one more push down in Solana. But then I think risk reward would be great because this looks very corrective, and especially if we get one more push down, risk reward would be amazing. I probably should have. I mean, we didn't have a show over the weekend, but we had from this X wave here. We got 1, 2, 3, 4, 5 wave moves down. that actually was a really good point for a potential buy. The risk reward was good on it for a push up, and we've actually had a really strong push up. So we dipped to something like 204, somewhere around there on Solana. We're right now on 224. So that's $20 move up. So basically a 10% move over the weekend. So, and as I say, that was a 5-wave move down from there. Very clear 5-wave move down. So risk reward was great. You could have potentially, I didn't do it, by the way. But
I did it on SHIB.
Yeah,
Similar.
fantastic.
Yep.
Yeah, I mean, I've been busy packing up, traveling, and everything, so not been able
Yeah.
to do it. Yeah, just been out in the market. But if you've been watching, you can't be on it all the time. But if you've been watching,
you can't trade. You can't get them all. And I can't stand also being in a trade when I go to sleep. I'm just more apt to just close the darn thing, because how are you going to sleep in a trade? You know.
Yeah, you don't want to. I mean, you can put your stop losses on and you take profits and so on, but even then, you can potentially get what are called gaps in the market, which could basically jump over your your stop loss or whatever, could get you in trouble. So you're right; it's not good to sleep on a trade, really. Best to think about your health first. So yeah, let's just see. As I say, CPI is a really important one to watch. If we get strong CPI, I expect probably we'll get this other push down, but that would be great risk reward. And actually, it'd be a relief to me because I missed this one. But if we push down again, maybe I won't miss the next one. So we'll see. I'll definitely look to, if it pushes down here, I will look to jump on that. And target range would probably be around the 194, 195, somewhere around there, maybe, if we push down again. But then this being corrective, I would hope for a push higher. And if we did manage to get the 195 on a trade and push to, 280 or something like that, it's a massive move up percentage-wise. It would be amazing. No,
and that's Solana. It's such a liquid market.
Yeah, I mean, there's been some negatives. I mean, Solana, I think they were rejected again for the ETF, but I think that was expected, so it wasn't a major blow. I think Solana's gone pretty much in line with the rest of the market, but today, it's going really nicely. Ethereum has been lagging a little bit. We did get over the 4,000 level. We're back to 3.7 at the moment. Again, I think this looks like a 5-wave move down, maybe a 3-wave up and another 5-wave down. So like the rest, I think actually we're just in the midst of a correction, and we're just moving up to complete a B wave, and we'll probably get another final wave down for the C wave before we then push up properly on Ethereum. So pretty positive, really. I just think that the likelihood is of a pullback with this CPI news. Let's just see. As I say, best not make any conclusions, rash decisions before it, because when you've got a big data point like this, if you get it wrong, it's potentially costly. So
that's a gamble. That's when it comes into gambling.
Yeah, and that's what you got to be aware of. So there's especially when you're trading manually, obviously you've got fear and you've got greed, and then you've got this gambling thing. So you want to try to avoid outright gambling. You really do, because the chances are you get it wrong as often as you get it right if you gamble.
You know what they say, the house always wins. So if you're gambling, the house is going to win sooner or later.
Yeah. We said gold has actually been going pretty much in line with risk assets at the moment. We've got a kind of 5-wave move down. I think we've got a 5-3-5 potentially. May not be complete as yet, but I think gold may have one more. I have mentioned on previous shows actually that I think gold may have one more leg down, but I do think that longer term gold's looking amazing. I think we've got definitely some more upside to come. Interestingly, I think, counting the waves, I think we've got 1, 2, 3, 4, 5, 6, 7 down. I think that's 7 waves. I probably need to look in more detail on a shorter time frame to be certain, but this is 4 hour. It's pretty short. 7 waves down, by the way, is corrective. It's not impulsive. So that means that the move down from the top is not an impulsive move. That means the impulsive direction is still to the upside. So that means that this move down is corrective. It's against the trend, which is higher. So even if we push down one more, which is probably a real probability, or a real possibility, I should say, this shouldn't be the all-time high for gold. Well, it is at the moment the all-time high, but I mean, we should soon break that all-time high to reach brand new all-time highs for gold. So just interesting to know when you again, got some experience of using Elliott wave. This 7-wave count is corrective. 5 waves would be impulsive, but this is 7, so it's actually corrective. So I think that we're maybe in the midst of a bit of a correction to the upside, then probably one more leg down, and then we move to new all-time highs for gold. So again, if you're brave and if you're not over leveraged, and if it's a sensible proportion of your portfolio, and gold should probably be a constituent of any well-balanced, properly diversified portfolio, then just hold on to it, because I think you should hold it as a well-diversified portfolio, and I think it's going to go to new all-time highs once again. Before we finish, we should definitely touch on XRP. And XRP, again, a bit like the rest of the market, we've had a move down. It actually appears to be some kind of 3-wave move down. Now, again, it could be, theoretically, that could be complete, that correction. And it's quite a heavy correction when you look at it. We came from $2.91 all the way down to $1.89. So yeah, massive move down, and we always know that, don't we? For XRP, it's highly volatile. You know, it can languish and hang about for ages, but when it does wake up, it shoots the upside. But also when it moves down, it moves. I mean, from 290 to 190, that's a fair old move, 30% move in just a couple of days to the downside, and 30% substantial. If you're 3 times leverage, you're going to be wiped out with costs. So yeah, and the carry would have been against you. You would have been wiped out if you had 3x leverage to the upside on XRP. So that's why you've got to be mega careful leveraging some of these highly volatile coins. Don't do it. Oh
yeah, Ripple, XRP, XLM, you know, even SHIB. Yeah, these ones that do these 10%, 20%, 30%, 50% moves sometimes in one day. Yeah, they're hard to trade.
There's one the other day I saw I think it was a 3,000% move. I can't remember which one it was now, but there are some great opportunities out there, and that had pretty good liquidity as well. I wish I could remember. I think as part of the show, actually, we might focus some of the show in future maybe on some of those amazing opportunities. They're not guaranteed, nothing is, but sometimes if you catch 1 or 2 of them, you can do your portfolio the world of good. So yeah, XRP, as I say, it could be complete ABC down. That could theoretically be complete, but I actually think, especially with CPI coming out, that may be just an A wave down. We could be working on a B wave up. I think we've got one more wave down as a C wave. But if we get that, then we should then push up again. Probably, if we do get another push up beyond this local high here, the next push up will probably take us to new all-time high for XRP. If this is the case, if it's an ABC down, the next push up again, XRP should be mega aggressive. So maybe this will come after Jan 20th. Who knows? Don't know quite timing on these things. But when Trump actually is inaugurated, who knows? I mean, there may be some volatility before that. We have heard that will be people want to do all those actions, those geopolitical, the warlike actions, all the problems, get them out of the way. During the dying days of this last administration, before Trump is, but maybe when Trump gets in, we'll get another rally, another Trump rally. Who knows?
It's quite possible. I mean, a lot of people are betting on it. I'll say that.
Yeah,
that doesn't mean we'll get it, but it could. You know, they like you said, they're trying to. There's all kinds of stuff happening. I mean, even look at what happened over in the Middle East. I mean, they definitely wanted to get that out of the way before Trump got in. You know, and I know Putin, I'm sure, is considering moves to make before Trump gets in, and Iran too. You know, they don't want
absolutely. Everything's to play for now with Syria. There's a lot of outside interest there. Now Assad appears to have fallen and gone, so it's kind of like a vacuum. And yeah, everyone's vying for their place. And you know, Israel's obviously worried about their security. So yeah, there's a lot to play for there. A lot going on. So maybe maybe that happens before Trump actually gets in. So maybe this correction will. And actually, what we said in the last few Impact Money shows, we were talking about a correction was very much overdue here. We had the all-time high for, well, not the all-time high, sorry, the local high for XRP here. We had a 30% pullback. And as I said, a lot of the tokens, I mean, Solana, for example, it was 265 or 267. It dropped to 204. So in percentage terms, similar sorts of fall. So big falls, really. And we said we anticipated that there may well be a correction, that greed had got to the extremes. and we watch this fear and greed index. Sometimes as greed is rising, yes, there's more and more people jumping in the market, but when it gets extreme, at some point, there's no more people left to buy. And so there's only one way for it to go. And that's pretty much where we were. We saw greed at almost all-time, if not all-time highs. So there's really no more room for buyers at that time to come in. And so we got the pullback. It was what we anticipated pretty well. We did say just be wary that although it could go higher, we said be very, very aware that there could be a substantial pullback. So far, we've had a good pullback. I would say that we're probably not over that just yet. It's looking really bullish last couple of days, but I think we'll probably get one more leg down personally. So if you miss out on a gain, you know, when a market pumps or something like that, it's not the end of the world. There are always new opportunities. And this is a problem. People are always desperate, saying, oh, I missed it. You know, if I miss this move, I'll miss it, you know, whatever. It doesn't matter.
So important to remember. It is so important to remember. You do not want to chase. You don't want to chase the market.
Yeah, I mean, again, it's one of the biggest weaknesses of retail traders is kind of addiction to trading, and we always have this one, FOMO, fear of missing out, and this is actually what drives most losses is FOMO, because people see a big rise in the market and they want to jump in and they just can't discipline themselves to say, actually, the market's already moved. There shouldn't be a fear of missing out. There should be
it was a nice move, but you missed it. So you know what I mean? It is what it is. It's not a nice move for you anymore.
Yeah, it should be an acceptance of missing out and look for the next opportunity. Don't worry about the past. And that's, you know, that's a big problem. You don't cry over spilt milk. You look forward to opportunities. The market is full of opportunities, always moving forward. So don't look back. Don't cry over spilt milk, and never FOMO, fear of missing out. Never get into that mind space. It's a big problem. So yeah, let's see CPI today. We'll report back on it tomorrow, I guess, and yeah, that should give us some more clarity on where the markets are going, and we'll get more information about when Japan are moving rates potentially, when US are moving rates, what the likelihood is of each one in terms of direction and magnitude, and we'll hopefully let that inform us where the markets are going. But as I say, for now, I would say caution is the order of the day, even though I've had a great start. I say a great start, it's well in the week actually, but we've had a great couple of days. I think we probably are due a bit of a pullback again to complete the correction before we then rocket higher. So as I say, let's look forward to tomorrow, Bruce. I think it's going to be an important, well, today, watch the market, watch the CPI, and look forward to tomorrow. And we'll what do they call it? Not disseminate, I mean, disseminate the news, but dissect the news and see what it has, what it has in store for us in terms of direction. So hope that was helpful, everybody. Look forward to tomorrow, and thanks for listening.
Thank you, Matt. Always a pleasure.
Look forward to the rest of the show. Cheers, Bruce.
Cheers. Well, I'll tell you what, it is really interesting how everything is playing out. Of course, you have a lot of the big chess moves are happening right now, right? You have people trying to get things done before Trump gets into office. I mean, and that's whether it's the Senate and trying to get the judges through, or whether it's on the the world stage, people trying to finish up the wars, get the wars to get us so involved maybe in the wars that there's no getting out. All of these types of things. There's really just a lot going on. Of course, you have Trump continuing with his appointments of his cabinet. Alina Habba, I think that's how you say her name. She has been now put in as I think she's going to be a counselor to the president. Everyone loves her. I'm not sure if they love her because she does a great job or just because she's pretty good looking. I'm not totally sure on that, but I guess it doesn't really matter. Maybe both, right? Maybe both. Kash Patel has continued to make the rounds. Of course, he was meeting with certain people on Capitol Hill, meeting with senators, trying to get his stuff set up for the FBI. The woman there from Hawaii, world players, BlackRock currencies, moving chess places all over the world. BlackRock, man, it's just so unbelievable. This company doesn't even have a board, guys. It's like, and they're controlling everything. BlackRock is controlling everything. They are the central banking cartel. They are controlling everything. You know, they bought like I think over half of the Ukraine. So all this money that we're pouring into the Ukraine, of course, they're doing it. What's the name of that woman? The woman that he appointed for what is it? DNI? Trump. Tulsi Gabbard. So Tulsi is in a bit of they're trying to take out Tulsi because of course you can't have any patriots in there, right? And so Tulsi, they're pointing to a number of things. One of them is an interview that she did some time ago where she said that Assad was not our enemy. And the truth is, guys, she's correct. Good morning. Tulsi has more than 250 values. Here she is right here. I'll just share this real quick while we're talking about it here. I think, I was talking about it with the guys. I think it's, man, I don't think she has much of a chance really of getting confirmed. Let's see what she has to say here.
I want to address the issue that's in the headlines right now. I stand in full support and wholeheartedly agree with the statements that President Trump has made over these last few days with regards to the developments in Syria. My own views and experiences have been shaped by my multiple deployments and seeing firsthand the cost of war and the threat of Islamist terrorism. It's one of the many reasons why I appreciate President Trump's leadership and his election, where he is fully committed, as he has said over and over, to bringing about an end to wars, demonstrating peace through strength, and putting the national security interests and the safety, security, and freedom of the American people first and foremost.
I mean, she sounds pretty good, wouldn't you say? I tell you, it is pretty interesting. We have RFK Jr., former Democrat, Elon Musk, former Democrat, Trump, former Democrat, Tulsi Gabbard, former Democrat. Yeah, it's continued. All right, I'm going to put this back up here because I wanted to kind of get what this was. My friend Tulsi Gabbard is an American hero. Lead the DNI. So yeah, she is under fire.
Well, a lot of things have taken place since 2017. Her position, obviously, because of the actions of Assad and what has happened in Syria, has changed. Keep in mind that when she went over there, she was still, now she wasn't over there in uniform, but she was a captain in the National Guard. Since then, she's has moved to reserve in the Army. She has been promoted from major to lieutenant colonel since then. She's currently over the reserve unit in all of Oklahoma and Missouri. She has clearances. She's able to do her job, and I think she's 100% qualified to be the next director of national intelligence. And so I'm excited about her opportunity because she is perfect for the position. Well,
it is pretty interesting. Of course, he brought up the clearances. One thing that Trump is trying to do, I haven't heard if it's been successful or not, but he's trying to streamline the clearance process. So if you're here in the district, you kind of understand everybody gets clearance that they want to get clearance. Trump didn't really understand that in his first term. He could have just said, you're cleared. And that's it. He didn't have to wait for the FBI to give people clearance, and the FBI wasn't giving clearance to a lot of the people that he wanted. But they give clearance to whoever they want to give clearance to. And I hope that he understands that now. It seems like at least he's starting to put together the pieces or put the strategy in line. So he wants to, quote unquote, streamline the process. So that's a good sign, because in order for him to get things done, he needs people around him that are going to get things done. And as of now, as I mentioned in the show a couple of times, if you are trying to get a clearance and you are anything, even publicly supporting January 6th, they won't give you a clearance. They won't give you clearance. And so January 6th was a mostly peaceful protest. I mean, they didn't burn stuff. That wasn't like a Black Lives Matter protest. Some people did go into the Capitol, but I mean, talk about a pretty hokey deal. I mean, I think they stayed within little roped off areas, you know what I mean? And as well, it looked like a lot of government assets were in there kind of egging them on. And, you know, there's lots of video of people showing their IDs and stuff like that. So, but that's going to be pretty important for him to take the reins. So I'm watching that. I am watching that closely because, of course, if he gets a bunch of people that, you know, didn't support him during that time, because January 6th, of course, was about Arizona and the other states protesting the vote that they thought was fraudulent, or that they thought there were enough irregularities to stand up and say, hey, we think there's something wrong. This should be looked at. This vote shouldn't be counted. We need to redo this. And that's what it was about, which is perfectly constitutional. Nobody brought any weapons or anything like that. It was a mostly peaceful protest. So anyway, great show today, guys. We're going to be watching the markets as well. We do have the copy trader now set up for folks. So sign up there at 2bit. You can trade with us, 2bit.com. Make sure to use Impact Money. J6 is not for Antifa and the FBI showing up. The bomb-proof doors could not have been opened on the Capitol. You know it, Johnny. I know it. Everybody knows it. But, you know, they went around and they said it was an insurrection over and over and over again. And they plastered it on TV everywhere. It's insurrection, insurrection, insurrection. And, yeah, it's crazy. Anyway, we'll be back on your TVs, I think, in 2 hours and as well in 3 hours. And we'll be back here live streaming again tomorrow morning. A lot going on with Global Boost, as I mentioned. Do with that information as you may. It is available on the open market. Cheers.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.